Thank you for coming back to the House of Banelord, and today we're going to be talking about a very important subject that not a lot of people want to talk about, and it's insurance. Now, when you think about it, what do you think is the most catastrophic event that can ever happen to your life? An event that's so terrible that it could literally ruin you. There are a couple ones. One, going to jail. That's bad. Getting caught the law, that could really financially ruin you. And another one is getting really, really sick. Let's look at this. For example, if you were to die, you would obviously have life insurance. Now, the only purpose of having life insurance is to provide your dependents with some money after you die. But if you don't, have dependents, why would you have life insurance? But what if you survived? That's the key. What if you survive? Now, no one gets money if they survive, except for if they have a very specific insurance that's called critical illness insurance. This insurance is relatively new and not understood very well. Basically, what it is it will give you money in case you survive a very life-altering event. Example, heart attacks, cancer, strokes. These are life-changing events that will happen to almost half of us, okay? I believe the recent study says that half of the people will get some form of heart disease in their lifetime. So we're looking at 50%. That's dramatic. So how does this insurance work, and how does it help you? Well, think about it this way. If you were to get sick, if you were to get cancer, if you get a heart attack, what happens? The first thing you understand is you're not going to be working, okay? Because obviously you gotta, rest and get well. And if you don't work, basically a lot of this, our means of income is our job. So if you don't work, you're basically not getting paid. Now, you obviously might have some, if you have a good job, you have some benefits that can help you with being short-term or long-term disability. But what they do, the maximum they can ever cover you is, if you're lucky, is 100% of your income. But let's be realistic here. You're looking at increased expenses because, one, you're probably gonna have to pay for drugs. Okay. Secondly, you might not be able to take care of yourself, so your expenses will increase. And if you're lucky, your income will still stay the same. So what happens with critical illness? It gives you a lump sum payment, assuming you survive to take it. Now that's the big thing. Usually it has something called a survivor period, and usually that is 30 days. So from the time of diagnosis, so you must be diagnosed with this specific ailment, and from that time if you survive 30 days, then you get a lump sum. The beautiful part is you don't have to pay it back. So if you survive it, you could use that money for anything. You could use that money to go on vacation if your illness, your cancer is that terminal and there's no stage 4, there's no hope. You might want to try to fight it, and then you can take your money and take your treatment somewhere else, maybe in some high-tech place that using drugs that are not approved by Health Canada yet. Whatever, it's your life, and you might want to fight for it. And then, but the beautiful part is, if you survive it, you don't have to pay it back. So it also has, because it has, they obviously want to insure healthy people because, then everybody would get sick. They would take this and scam it. How it works is that if you're healthy, you should get this because the steps in taking critical illness is very onerous, okay? First, they're going to ask you a bunch of questions, detailed questions, where you are on the record of specifically stating things. So you get a nurse, they'll call you, and that takes about at least about 30 minutes. It asks you many questions. The key is these diagnoses, they have to be medically diagnosed. So if you think you have, let's say, anxieties or something, if you have not been diagnosed with anxiety, then the answer is no. Okay, so you obviously have to be diagnosed. That's important. But if you are, you have to disclose it. Also, you have to disclose if you have taken any illegal substance in your last 5 years and you plan to skydive anytime soon. These are all factors. Now, when you get it, there's also a moratorium period. I believe it's 90 days for any form of cancer. So if, let's say, for example, you think you got cancer and you get this insurance, well, 90 days has passed before you can even apply in terms of getting coverage, you know what I mean? And if you have cancer by then, like before that, then you get nothing, okay? Also, they do check. They really do check, okay? So if you any term between 2 years has passed, if you ever got nothing, then they assume, you know, you got nothing, and then they'll pay. But within a 2-year time frame, they'll really start looking at all your you know, history and everything to make sure it's not a pre-existing condition, and then you lied on your application, which then makes it null and void because they're not gonna approve it either way at the beginning. So the best time to get this is when you're healthy, not when you're sick, because when you're sick, then it's too late and you're not gonna get it. Okay, but it does help because one, nobody has $50,000 lying around, and secondly, if you did, it's all gone. Okay, this basically gives you a fighting chance. It's not very expensive. It's a term kind of insurance, meaning that it goes by how many years, and by the older you get, the more expensive it is. I believe it goes in a 10-year increment, possibly. Yeah, 10 years increments. Then it doubles basically every 10 years. But still, you gotta understand the chances of you getting a cancer, heart attack, or stroke within the time frame obviously increase. So this is an insurance company. They have to protect themselves. Otherwise, I think it's a great deal because if you think about it, if you get it young, anything can happen. Nobody can predict this. You can live your life the best you can, but cancer happens, heart attack happens, stroke happens. And one other thing though, it's not just any kind of cancer, heart attack, or stroke. It has to be a very specific diagnosis. Not just the general term of heart attack, but their general definition in your agreement. So better read it carefully. They're very strict on that. It has to be severe enough. It can't be just, oh, I think I have a heart attack. No, it has to be a heart attack. And one part of the heart has to be basically dead in terms of pure definition. But in my books, even with that, it's still worth it, okay? If you're healthy. So it's something to consider. Because I know we all think we're invisible and we're going to live forever, but it just takes that one shot, okay? And you're going to be in the poorhouse, if you're lucky. So my advice for you, if you want to protect your life, if you want to have financial stability, spend the money and get the premium. Because, you know, for a goal that cafe latte, okay? And put a put option on your life. Thank you for coming back to the House of Banelord. You have a great day.